Over the past 24 hours, Bitcoin has run up to 112,000, then dumping slightly today back below the previous all-time high. S&P futures played out a pre-market dip, which is what Bitcoin followed. Bitcoin snapped back into correlation with the S&P during that downside move. Now, of course, a lot of people are confused about Bitcoin and its correlation. Is Bitcoin correlated? Is it not correlated? Bitcoin's hitting all-time highs, but the S&P isn't. But when S&P dumps, Bitcoin dumps. And when the S&P is bullish or stable, Bitcoin's going up. It's a little bit confusing, but it's actually pretty easy to understand once you get the hang of it, how the correlation works. Right now, Bitcoin is generally in the clear to do what it wants as long as the S&P remains stable. And we're seeing that Bitcoin is following the measured move target that we set a while ago on this channel. Multiple measured move targets have been hit, and now we're coming up towards 115,000. We got to 112,000 more than halfway through the measured move. And the question is, are we gonna get to 115,000 on this run? Let's discuss all of this and more in today's video. What is up, guys? Welcome back to the channel. My name is Kevin Svenson, and today we're going to be discussing Bitcoin in the crypto market. What you're looking at is the total crypto market cap chart, all of the cryptocurrencies in one index. We're looking at the chart going back to 2018. And I'm looking at the fibs, the fib extensions. When you fib from your 2018 high to low, the target was almost exactly at the 4236 in 2021. And with the idea of diminishing returns, it's unlikely that we're also going to hit the 4236 in this cycle, right? That's about 10 trillion for the total crypto market cap. It is unlikely, in my opinion, that we get there. I know people are going to say, oh, you're not bullish enough. People just want me to say the highest number possible. And then when it doesn't happen, they'll come back and complain in the bear market. So obviously we're not going to do that. We're going to give you guys realistic targets and realistic things to look for so that you can actually make money and sell at the right time, right? So it's unlikely that we get to the same fib target with the idea of diminishing returns. The market caps are getting larger. It's harder for the prices to go up as rapidly. And so we have a couple targets above us that I'm interested in right now. In terms of the total crypto market cap fib extension targets, I think the 1618 target is a very, very likely target, and that's 4.4 trillion. I think that's actually going to come up going into about, July, August. We may actually see the total hit 4.4 trillion and then probably a large correction thereafter. And if we're lucky and the cycle goes well, then we may be looking at a run into the end of the cycle, right? And then the halving cycle profit model that I've created. Just as a quick refresher, back in 2017 cycle, 80 weeks post-halving, it was the top of the bull market. 2020 cycle, 80 weeks after the halving, it was the top of the bull market. And in this cycle, 80 weeks is coming in October. This is the halving cycle profit model that I created that is free to use on TradingView. And so if things go well for this cycle, if we continue up into October as we normally would, then I would be looking for about 4.4 trillion in July, August, with a pullback and a rebound going into October as high as 6.7 trillion. And then the more likely target would be about 5.5. I'm not looking to necessarily sell at the exact wick top, because that's something that is really only for fools to try to do. Because if you try to do that, you're probably not going to sell at all. And so it's really best to just look at realistic targets and don't really focus on the top. Now, I've heard a lot of talk about people calling for 10 trillion this cycle, which again would be the 4236, which was exactly what we hit in the last cycle. But if you know anything about markets, there's usually a level of diminishing returns when things start to grow and get bigger. So your fib targets are almost never the same each cycle. So it's very unlikely that we hit 10 trillion this cycle. It's much more likely that we hit something like 4, 5, 6, or maybe even 6.7 trillion. Now, moving on to Bitcoin. This is the Bitcoin 4-hour chart. Now, about a month ago or so, or more than that, we've been talking about these measured move targets. And so far, these measured move targets have played out perfectly with absolute precision. Steepest part of the flagpole, put it on the breakout zone, and we wicked right into that target. And we literally wicked right into that target again take the steepest part of this flagpole, put it on the breakout zone, and we actually got halfway up to that target, more than halfway up to this target. Now, Bitcoin has currently stalled slightly, and that was very much due to the S&P 500 pulling back to fill this gap, or to at least test this fair value gap that we had today, right? The pre-market movement caused Bitcoin to dip earlier. This pre-market move was where Bitcoin also dipped. It's very much correlated. It's not exactly the same all the time, but you can't discount the correlation between Bitcoin and the stock market. And the S&P has been generally stable as well. If the S&P starts to lose ground and come back and test lower levels, if that does happen, Bitcoin will probably do something similar. It's not the end of the world, but it's probably going to be something similar. So next week, I'm really hoping that we just bounce from here, because if we do bounce going into next week, Bitcoin will probably fly. It may even exceed my target of 115 at this point. If the S&P continues upward, it may actually end up running towards 20,000 possibly. We're really not that far away. 120,000 is closer than our recent lows in April. We're much closer to 120K than we are 74. So saying these price targets is really not even that crazy of an idea. It's right there. Bitcoin's weekly RSI, this is something to watch. This is definitely going to be important here, guys, because this could be an area of major bearish divergence, where if Bitcoin, might find another lower high on the weekly RSI at a higher high on price, right? Maybe we're at 115, 120,000. And if we do get a rejection off the weekly RSI, then that could be a major reversal point, as that is weekly bearish divergence. To counter all of my bullish discussions here, I want to mention a major signal that you could look out for to sort of challenge your own bias. If you're feeling really bullish right now, take a look at the weekly RSI. And if we get up here and we're starting to reject, maybe you should get a little bit cautious. If we start to lose our previous resistance at like 105, 106,000, and we come back to this uptrend line, that's when things might actually change, right? If we come back down and we can't hold previous resistance and the uptrend line, and we break that area, 105, 106, this is where you might see a larger correction. I mean, looking at the long term, if you take that move into context, right? If you were looking at that in the future, I mean, this would mean nothing. Just like all these little swings, the short-term volatility ends up meaning nothing to you in a long enough time span. So you got to zoom out of your daily perspective and, just keep in mind, most of these swings mean nothing unless you're trading them short term. And if you are trading this market right now, well, then you can get set up with a pretty good deal here on BloFin exchange, 10% cash back on all of your trading fees for the rest of the entire future that you're trading on BloFin. You get 10% back forever on all of your trading fees. That means 1 in 10 trades is free. This is available right now. Lock it in today. Also, 15% cash back is available to the first 50 users that deposit on BloFin. Definitely read the instructions here. The first 50 people that take this offer will get 15% cash back on your deposit. All of you guys are available to get 10% cash back if you sign up with code Sven, right? This is a deposit bonus, but the cashback offer is something that you can lock in today and just have it forever. I don't understand why people wouldn't want to be earning money back on all of their trading fees. I understand it maybe if you don't like free money. Anyway, guys, hope you enjoyed this video. If you did, smash like, subscribe, and I'll see you all in the next video.